Whoa.
Fuck you better get up.
All right. Welcome to the Lending Lounge, everybody. Today we're going to talk about how does the homeowner's insurance premium affect your loan in the loan process. Jose, we have this situation, especially here in Florida. We can't speak about any other state, but here in Florida, there's a big issue going on with homeowners insurance premiums going up.
It keeps increasing.
Increasing to the point where this can either make or break a deal.
And more than likely will. And because I've run into a lot of situations where, whether it's the roof, whether it's anything from the 4-point inspection or the wind mitigation reports, these companies that have pulled out of Florida, even though it's changing, they might be coming back, and I'll let you know a reason why, but they pulled out of Florida for the simple fact that there was a lot of claims here in Florida. And that has caused a dramatic increase, not a slight increase, dramatic. And Pablo can explain to you what happened to him personally, but it's caused a dramatic increase in annual premiums. Basically, what you're going to be paying for in insurance for a whole year in advance, right? These things can make or break a deal because it hits your debt to income ratio. And if you exceed your DTI, then you're not going to have a loan.
Or you're just not going to qualify for that house.
For that house, particularly, right? So, it lessens your qualification.
100%. So let's put this in perspective for you guys. For example, I'm going to talk about my scenario. I bought my house in 2020. When I first got my insurance, the insurance was like $1,800 a year. Something manageable. Maybe that's not even $200 a month, if we just to say. So it's somewhere in that 175, 180. I don't have a calculator on me. The following year, it went up to $2,500, and it's like, okay, I expected some changes happening, but that's manageable.
What was the slap in the face?
The slap in the face was that every year kept increasing, and the last one was $6,000.
$6,000.
So you go from $175 a month to $500 a month in just insurance on something that's like it's not tangible, right? Like, I don't have a car. That's like a car payment. I don't have a car in my driveway, right? Like I am paying $500 a month in something that I'm never gonna get back. I'm not gonna be able to resell. I'm not gonna do nothing with. It's just insurance in case something happens. And I get it. We're in Florida. There's a lot of hurricanes that come through here.
Right.
We have a lot of storms. But $500 a month, Jose?
That's insane. That's like half your mortgage, if not a little bit more.
It was a third. A third. My mortgage payment was like $1,600. So $500 now magically is insurance. Homeowners
insurance. Don't forget
insurance.
Property taxes, association dues, plus the principal and interest on these current loans. I mean, all this can quickly add up.
100%, it adds up. So, in my situation, after, I wasn't about to pay $6,000. Be real. I ain't paying $6,000. Yeah. Somebody else can pay $6,000. I'm not going to pay $6,000.
So what'd you do?
So what I did was I kept calling different insurance companies. And it was crazy to me that nobody took the time to explain to me the reason why my premium was so high, including my current provider. Right? And that's somebody that actually...
They're looking at the numbers, they see your reports, and they still don't explain it.
My brother, not even that. The people that we deal with. Like, we had to replace them on our list of people that we do business with.
Right, because we deal with a lot of brokers in our field, so we could find...
So it's like, you couldn't even take down the time to explain to me why my insurance was that late. I had to literally call around. I found somebody, and that guy broke it down. So just to kind of give you guys a heads up, if your house was built prior to 1990 something, 99 I think is what it was. Like, there's a code, a building code that happened from 99 before, or whether it's 2000 or before. I'm not sure. I'm not my lane, right? I do loans. Right. My house was built in 1975. So obviously my house was not up to that code. My house was brand new. I gutted it and made it brand new. Everything, new tile, new flooring, new water here, new AC, new duct work, new everything. So there was nothing wrong with my house. Right. It was literally because my roof had 2 nails or 3 nails, and they wanted an extra nail and a tie down.
Right.
But nobody explained that to me. So here I am about to pay $6,000. So when I found that out, I looked around and found that there's a company that specializes in that. They specialize in adding the extra nail
and the tie down.
So to me, it was a no-brainer. Buddy, I talked to him. He told me that all you got to do is, do this. I charge you X amount of money. He got it done. I sent it back to my insurance company. Now it's down to $3,000. Not where I wanted $2,500, but I can live with $3,000 as opposed to $6,000.
100%.
So not only that, so that's one of the things that obviously, it hurts you financially, but you also need to have take into place, like Jose was saying, the debt to income ratios. If you qualify, we tell you, hey, go look at a house and you qualify for 300,000. The insurance is that we're putting to the side, or the estimate. Typically, what, Jose? What would you?
I usually put about 150.
150. So 150 is gonna be roughly about 1,800 a year. So that's the number that we're thinking. Okay, we're estimating. So if we're telling you you'll do that, and then now you come and you go look for a property that's close to a river, right? Or you got water view. Now you got flood insurance.
Yeah.
Or there's a million things that can make that insurance go up.
Anything can change. Yeah.
So now, again, we're thinking 1,800 is going to be about standard, but only if it's a normal house in a normal subdivision with no crazy outliners.
Right.
But you add your dogs into the mix.
Right.
You add that the roof needs to be replaced, or
your deductible being, whether 2% or 5%. I mean, that changes things up as well.
So now the insurance goes up, and now we have to figure out and let you know, do you qualify for that property or you don't? So again, if you're looking for houses, one of the things that we would suggest, Jose, is to make sure that they know roughly, at the very minimum, are you in a flood zone?
Yeah, I mean that's going to be done in, with the listing itself, right? So the realtor will let you know if it's in a flood zone or not. There's gonna be an elevation search that's done on the property during a survey, and that'll let us know exactly if you're in a flood zone or not. The bank is gonna do a search as well to know if you're in a flood zone or not. I actually had a case where the builder had the area in a flood zone, and then they did the elevation search, and it was removed. There was no longer an elevation search or in a flood zone. So that was reduced on the client. So that was a good thing that happened. So it all depends what happens and what you're dealing with. Things can change, right?
But just do your due diligence. Like, know that if you're getting an older home and it doesn't have a brand new roof, like that you got to replace the roof. Number two, know that the insurance company, with all the fraud that happened with roofs in the state of Florida, they're not looking to replace your roof. Right? Like, you can't just come in and don't think that, I came in, my roof is old, I kind of want a new roof, let me go make a claim to insurance. It doesn't work that way.
Maintenance is completely different than actual damage.
And I think that's one misconception for home buyers.
A lot of people think
everybody think that, I just make an insurance claim and I'm good. No, that doesn't work that way. Exactly. Maintenance is maintenance. Insurance claim is if something goes bad because of some severe activity, an act of God. Right. So know that. The other thing you want to kind of look out, other than the age of the home, the flood insurance, you want to make sure that the rest of the things in there, because there's 4 points, right? So they're going to be looking at roof, they're going to be looking at the AC,
the water heater. It's pretty much like the majority of all that.
So you want to make sure those things are up to date too.
Wood damage, things of that nature changes things up. And then there's a wind mitigation. So ultimately, when you're doing your home inspection, when you're going to buy a house, you're going to ask for the home inspection. You're going to ask for a wind mitigation report, which is basically with the tie downs and all that, and then a 4-point inspection. And those reports are then given to the broker that we use. And if you guys are looking for your own home insurance, you can give them those reports as well, because that'll dictate how it helps you. It'll give you a discount on your premium for insurance, right? And then that discount will help you. Instead of paying $6,000, you're paying $3,000. That's probably. And because you got a wind mitigation report with the tie down.
100%. If anybody, one of you guys need that contact, I'd gladly give you my contact for the guy that came in and did the extra nail and the tie down, so that he can help you guys out as well. Jose, anything else on this subject matter?
On insurance, just know that they're working on insurance. Again, it's out of our scope, right? I'm just going by what I read online and things of that nature, and what one of the insurance brokers that I work with closely, he was basically saying that more companies are coming into Florida again because there's less claims being filed now. So now that the less claims are being filed, companies are going to come back in. A lot of people might have received and I'm not going to name the big names of these companies that pulled out of Florida, but they basically told them, hey, we're pulling out in 2024, right? We're not going to do no more loans. You're going to have to find your own insurance. I believe you received it.
Mine is one of them.
And that's going to change in the next coming years. And I think obviously, not being political or anything like that, but policies in place are going to start working towards helping us get insurance decreased. So these companies are going to come back eventually.
And hopefully with competition, the cost can go down too.
Absolutely.
And everybody can benefit from that, because it is tough. I mean, trying to get somebody with a high rate environment, trying to get somebody
exactly
approved.
what I was going to say, right? High rates, high monthly payments. The market, the properties are high. Everything is high. I feel like that. What's that one video? The guy's like, too damn high. Everything's too damn high. Well, that's what I feel like in Florida, right? Like everything is too damn high. Food costs. Man, I bought 3 things the other day. I just got a 10-month-old, right? And I just got some yogurt, some baby yogurt, which was like $7 a piece.
Yep, everything's expensive.
And I wanted to make burgers, so I bought me a little Bubba Burger thing. Damn thing was $30 for 3 items. I was like, what? So everything's too high. Too damn high.
Everything is expensive. So
we need some relief somewhere. So if insurance is one way of doing it, please do that. Oh, by the way, March 1st already came and went. I wish I would have told you guys this. But if you have a homestead in your property, please do so.
We'll talk about that for a whole nother video, so you guys can know exactly what the homestead is. But this has been the Lending Lounge,
where closings are made simple.